Okay. I would welcome you to the second session. And after the first interesting session, hearing a lot about green investments, I have the honor to start this session for Greek reality, let's say. Just a short introduction. Currently, Eurelectric face a paper with a recommendation on market reform. Stress out the necessary investments in all value chains, even production networks, or also to the end point of value chains, means in energy efficiency and maybe electrification of transport and all of this. Huge investments. Innovation is the key in order to make this investment, but also innovation is needed in finance. According to this framework, we have a great panelist representative, the private sector in Greece, the banking sector, but also the public sector with, I will recommend, with a private concept. I would like to first to hear from Mr. Yannis Yarendis, is the chairman of a board of directors and CEO of ODAPEP, to give his opinion about green finance in Greece by his perspective and his position. Thank you very much.
Thank you, Ms. Politopoulou. Thank you, Mr. Stambolis. Initially, I would like to thank ENE for this initiative to have such a discussion about green bonds. Mr. Stambolis knows very well, since many years, my interest about Greek bonds. We have discussed a lot, and I think this is the reason why he sent me this honorable invitation. Dear all, I'm representing DAPEP. DAPEP is the state company who is operating the renewable energy sources. And we all know that the renewable is, I would like to say, in the middle of this discussion about green transition, about the future, about the targets we have for 2030, the target for 2050 for a net zero planet. So we are here to discuss about what do we think about all this we have in front of us. The global green bond market has developed rapidly since the first green bond was issued by European Investment Bank in 2007. The initial challenge was far more challenging than developing a bond initiative, a bond prototype tied to environmental impact. It was to create a new class of securities that would be transparent, measurable, compliant with international standards, attractive to institutional investors and environmental organizations alike. Green bonds are designated bonds intended to encourage sustainability and to support climate-related or other types of special environmental projects. I would like to point out that 20 years ago, nobody have heard the word ESG. ESG is something we all hear the last years. That period, only few people around the world were discussing about environment. Maybe some organizational around the globe, and only them. Later on, this became some kind of state policy, company policy, and everybody was discussing more and more about ESG. And we have this ESG now not only as a term, but also as a strategy. In many companies, we have ESG as a central strategy for companies, even for institutions like exchange stock markets and many other places. Green bonds are designated bonds for covering environmental and sustainability scope. More specifically, green bonds finance projects aim at energy efficiency, pollution prevents, sustainability, agriculture, fishery, forestry, the protection of aquatic and terrestrial ecosystems, clean transportation, water clean sustainability, water management, and more. They also finance the cultivation of environmentally friendly technologies and the mitigation of climate change. The EU is taking further steps to implement its strategy on financing sustainability growth and the transition to a climate-neutral, resource-efficient economy. Negotiations of the Council and the European Parliament reached a provisional agreement on the creation of European green bonds. Under the provisional agreement, all proceeds of EU GBs will need to be invested in economy activities that are aligned with the EU taxonomy, provided the sectors concerned are already covered by it. For those sectors not yet covered by the EU taxonomy, for certain very specific activities, there will be a flexibility pocket of 15%. This is to ensure the usability of the European Green Bond standards from the start of its existence. The use and the need for this flexibility pocket will be re-evaluated as Europe transitions towards climate neutrality progresses and with an ever-increasing number of attractive and green investment opportunities that are expected to become available in the coming years. Greece is committed to reducing greenhouse gas emissions by 15% by 2030, and maybe will be more ambitious targets, and achieving net zero by 2050, as outlined in the May 2022 climate law, recently voted. In addition, issuing green bonds can finance the implementation of Greece's sustainability strategy, which involves public investments. The Greek government and the private sector had already taken the first steps in terms of issuing green bonds. Conclusion: Green bonds are a natural source of financing for issuers who have a financing and refinancing requirement for a green project. Further issuers who would use the proceeds to finance projects towards its environmentally and socially responsible programs. For example, to reduce the carbon footprint or waste from its ordinary business activity. Could also tap the market and further signal its commitment to its cause. Green bonds can be attractive to issuers and investors alike with the right balance on the green and commercial aspects. Closing this short discussion, I would like to point out something which is in front of us. I believe that green bonds could be a very good financing tool for financing what we call green or RES PPAs. What is PPA? PPA is a contract between a producer, we are interested in the RES producers, and an off-taker, a consumer, or any industry. And they are creating a new project, they are building a new project, a wind farm, for example, and they need financing. We believe that green bond could be a very good tool for this financing, for financing green or RES PPAs. This is something which we first say from this floor. I don't know if the banks or other fund or investors could create such tools, but I believe that they should think of this proposal. This is something new. I don't know if it was said before, but I believe that is the best way to finance the RES PPAs, which is something we have in front of us. So far, we have the RES, the state PPAs. However, we are running in a new period for new PPAs which are out of the state, out of the government, what we call a totally private PPA. For this, we have to consider all parts of the economy. We are living in this interesting period, what we have in front of us. Thank you very much.
Thank you, Mr. Geredis. I pick up two important issues. ESG, we know how this is important now in companies and in their strategy, and his connection with green financing. And second, the very, very important about PPAs for renewable energy resources and green bonds in order to realize these PPAs. Thank you very much. We are going to hear the view of private sector from Mr. Gonis. Yes. He's Investor Relations Officer in YEK Terna. It's a group with a variety of activities. And we'd like to hear his opinion about what is this green investment in Greece, how is his company related to this. Thank you.
Thank you very much, Ms. Politopoulou. Thank you to ENA and Mr. Stambolis for the invitation and the opportunity to participate in this interesting debate. I'll present, as Ms. Politopoulou said, our view as a company and as an investor that we are active in the renewable energy market through our subsidiary Terna Energy. As you may know, Terna Energy has been the first private issuer of green bonds in the Greek market back in 2019, when we managed to raise 150 million from investors through a green bond issue. Actually, the green bond perimeter and the characteristics of the issue facilitated the participation of international investors in the bond, like EBRD, allowed us to achieve a very competitive pricing, 2.6% at that point in time, and also allowed for a very good subscription. The total offers at that point exceeded 650 million for subscribers. At that point, we had an investment program of 220 megawatt that we aimed to finance with these proceeds, and with the support of the green bond that we raised, now more than 100,000 households are powered with renewable energy every year, and more than 270,000 CO2 tons are avoided from the atmosphere every year with these projects. Now, fast forward to 2023, renewable energy has clearly became the answer to the trilemma of sustainability, affordability, and security for energy. And this has been reflected, as has been discussed previously, by very significant policy engagements by all policy setters, and more recently with the REPowerEU aiming for substantial increase in installed capacity. And to our estimates, achieving these targets could mobilize investments to the tune of €1 trillion. At the same time, we also need to note the swiftly changing market backdrop as stakeholders are trying to balance the pandemic aftermath, the energy crisis, the geopolitical tensions, inflation, and the monetary policy cycles. Terna Energy has recently presented its own updated investment plan, if you like, our view and our answer to the challenges, which has been an investment plan aiming to add 5.5 gigawatt of green projects up to the end of the decade, mobilizing investments to the tune of 6 billion up to 2030. And having this massive investment program in front of us, funding is of critical essence for us. So apart from the organic cash flow generation that we hold and we generate as a company, we traditionally use combination of other instruments like project finance facilities and DCM issues, always considering that the funding cost is one of the key elements determining the profitability and the viability of a project. Another point is that for a very long period in the recent past, PF facilities was the go-to structure for funding these type of projects, i.e. projects with long-term cash flow streams, secure and visible, underwritten by state-guaranteed PPAs. We have to note that this was not the case in many of our peer countries in Western Europe, like Spain, France, Italy, where the companies leveraging on the sovereign situation there were able to use much more the green bond market and substantially increase the mix of these type of proceeds in their funding envelopes. Considering also the rise of the ESG awareness of investors, you understand that this has been a key theme for the European renewable energy sector. We hope, based on the outlook for the Greek sovereign, that soon enough we will be facing this type of welcome dilemmas and this optionality for funding our projects as well. A final point, and then getting closer to what Mr. Giaredi's closing remarks were, is that we are currently discussing a lot about the PPA prices and the PPA environment. We need to note that the PPA price for a renewable energy project is essentially the outcome of a pretty standardized Excel formula. You have your CapEx, you have your OpEx, your cost of money, and more or less this is your ask, what you're looking from your buyer to pay. And in many cases, this ask might be flattered compared to the prices that we see in the power markets, in the wholesale market, or might not, depending on the period. Currently, or in the previous months, it was something very flattering. But again, it's not comparing apples to apples. It's a different outcome, as the drivers of this price are not exactly the same. In this context, the cash flow profiles of the projects that are coming to materialization has shifted a lot versus what we have experiencing in the past. So moving from the state guaranteed offtakes to the PPA market, much more merchant risk is embedded on our projects, and funding and finding tools that are suitable to develop these projects is becoming much, not more difficult, but we need to examine more options versus what we currently, what we have been doing in the past. So, and finalizing, this would be my comment, that the green bond market needs to provide the necessary flexibility to the investors so they can price and they can assess and match the risk, the increasing risk that projects are now facing with the funding tools that they have in their options. Thank you very much for the attention. Looking forward for our discussion going forward.
Thank you, Mr. Gonis. I keep the last one, that the word flexibility is very trendy now. We see flexibility also in green finance. I think we're going to discuss after that what is needed to this. I would like to welcome our next speaker, is Mr. Gavalas, is General Manager Treasury of Mytilineos. We know this company has activities in 5 continents, so I would like to hear your view, not only in Greek market, but also if it's possible and to compare with the other activities in other continents, let's say, not only Europe. Thank you very much, Mr. Gavalas. The floor is yours.
Thank you so much. Thank you for the kind invitation. Topic is hot, is spot on. It's something that we deal every day. As you kindly said, we've started not from Greece doing increasing the green footprint of the group. We had our target set 3 years ago, where by 2030 we're going to be -30, and by 2050 we're going to be neutral, net neutral, at 0. So on the back of it, we've started like having all the EPC for third parties from Australia to Chile, UK, Europe, and everywhere else. And this is how we've learned the markets, because each one has its own characteristics, and then we've entered as investors. So we are currently having mainly solar projects in Australia, in Chile, in Romania, in Italy, UK, and many other places. And of course, we are starting being really big in Greece. So this discussion is very much coming on a timely manner, and very eager to hear what Thodoris and Spiros will have to say about funding in Greece looks like. So our experience comes from the global markets, meaning that we just have a couple of financial closings in Australia and in Chile, in New York. This has been under PF, obviously. And a couple of years ago in the global market, I mean in DCM, debt capital markets, we have had the first Greek DCM green one, for which was for $500 million, 5 years at 225. So by year 2, which is now, we've spent all the money that have been earmarked for this particular spending. You have to know that this market accounts more than 2.5 trillion so far. Of course, there was a backdrop last year on the back of Ukraine crisis and, of course, the energy crisis. Year by year, all type of green, social, sustainability and sustainability-linked have a total size of, say, half a trillion to 600 billion. So this is the size. And of course, most of them are green, meaning that you have to earmark the spending that you're about to go for and not the KPIs on which you're going to be assessed and appraised year in, year out. Most of them are global, and this is how we've chosen to go the DCM way. But we have always avoided going and accepting the merchant risk, something that is vital and we all have to care about. Going through the PPA and mostly through the corporate PPA, which I guess is the way forward, indicates that what you do in terms of project financing, in terms of viability of a project, economic health and everything like it, make it bankable. So you go end to end, you address all the risks associated to it, and so you will be able to get all the funding that you need to the extent that the off-taker is credit-worthy. Now, the pipeline of the group, following what we did globally, is something like 9 giga for the years to come, so it's pretty huge, and 2 out of them are in Greece. So it goes without saying that this is a time that we're going to have to see how this is going to be financed. The first small tranches have been covered by RRF. So RRF gives an answer to it in European scale. We have to know that anything that has to do with green bonds and this type of instruments that can finance this type of projects, 80%, if not more, are in Europe. So, and of course, this has an explanation to it, but I understand that this is going to change gradually, or at least this is what I hope for. So coming into in Greece, we have started 2 decades ago going into PF, mostly wind. Now solar is in play, and this is what we are discussing with our friends in banks, going the PF way. We may not have the PPAs with somebody else. All we are doing is that we are naturally hedged because we self-consume what we produce either through the retail franchise that we're having or through aluminum smelter that we use these. So we do end up with a green metal. So this is the concept, and this is how we are going to accelerate reaching the targets that we have set, I guess, even sooner than 2030. So the only, say, advice or experience that I've got from the global markets or concern is that we have to go to a pace that is safe, that is healthy. Always look where to sell them, always look where to sell them and at what price, to go for the nice credit, to have healthy bankable terms for each one of them, and of course not to get into an oversupplied society and economy or a market that will create eventually a problem with the spot market prices. So this is something that we would like all of us to avoid. So we need to go cautiously, step by step, and of course addressing the green targets and the green target that each one has had. So this is from my side, and happy to answer anything that you would like to ask now or later on. Thank you.
I have a lot of questions. I'm keeping also green energy, green production energy, green funding, but also new products, green metal. Also, maybe needs green funding and maybe green efficiency, green funding. But now we are moving to the necessary, the go-between, banking sector. For all this. Yes, please. I'd like to have Mr. Zouros. He's Executive General Manager, Chief of Corporate and Investment Banking in Piraeus Bank. So we'd like to hear from your view about green investments and green funding by you. Thank you.
Thank you very much, and thanks a lot for the kind invitation, and Mr. Stambolis and ENM. So today's presentation, very briefly, we're going to show you our perception about the green energy sector in Greece. What do we expect in terms of investments? What are the financing tools and the role of green energy bonds? So, very briefly, if we have a look on the targets provided by the National Plan for Energy and Climate by the Greek government, you can see that the installed capacity of renewables in Greece is expected to increase from 9 gigawatts to around 18 gigawatts by 2030. This is 14 gigawatts in 7 years. Today we have 9, so it's a tremendous increase. We also have to say that according to this plan, most of the increase is coming, of course, by the photovoltaic and wind. Nevertheless, there is an assumption that 2 gigawatts of offshore wind will be installed in Greece by 2030. We consider that this is quite optimistic, and we think that it will take some time for Greece to see offshore wind parks, as licensing is going to be quite challenging, and we expect also some reaction from local communities. Nevertheless, we think it's going to be a tremendous increase in renewables over the next 7 years. The key question is, first of all, who is going to develop these parks and how these are going to be financed. If we see the plans that have been announced by the 5 biggest energy groups in Greece, you will see that the current capacity they have in renewables in Greece, Christos, I'm referring to your capacity in Greece, okay? Okay, so it's going to increase from 2.8 gigawatts to 18 gigawatts by 2030. This is 5 times more than what they have today. This is a huge pipeline they have, and they intend to develop. Of course, you have the new players in the market are the 2 refiners. In the last 2 years, they have chosen to diversify their business model. They have entered the renewables, and they have utilized the record profitability generated by their refining business in order to penetrate the sector. PPC, they have announced a joint venture with RWE in order to co-finance the huge pipeline they have. And Tena Energy, according to press, there are discussions with various financial investors in order to support their program. At the same time, all the players have announced JVs with a number of international players which are active in the offshore wind parks. What does it mean in terms of investment size and financing needs pipeline of renewables. As you can see, in terms of generation capacity, till 2030, in the next 7 years, we need 15 billion of new investments, most of them related to installing solar and wind capacity. Apart from this, we have to take into account the investment needs for the Greek grid operators like HEDNO, the DESFA, the transmission operator ADMIE. This aim to spend around 1 billion per year in order to upgrade the infrastructure systems needed to support the renewable systems. So overall, we're expecting, in order to realize the pipeline that has been communicated by the Greek government, but also supported by the energy players in Greece, we're estimating a budget of 22 billion capex the next 7 years. Assuming some leverage ratios around 60 to 70%, this would imply financing needs in the range of 13 to 17 billion over this period. What are the financing needs that we have to, the financing issues that we have to consider when scheduling this pipeline? First of all, what we have addressed, what are the issues addressed till 2022? As you can see from this graph, till 2010, the development of renewables in Greece was not very aggressive. In 2010, we had the introduction of higher feed-in tariffs. This gave a big boost to their development. In 2014, we had the retrospective revision of the feed-in tariffs and their reduction, so there was a stop due to the surplus capacity and the issues with Laguier. In 2016, we have the change in methodology from the feed-in tariff to the feed-in premium. And from 2017, we have established the auction system. And we had 8 auctions already awarded for wind and photovoltaic capacity. Under both schemes, and the feed-in tariff and the feed-in premium, the financing issues that the bank had to face are quite similar. We had the same off-taker, the PEP, and before it was Laguier, and we had 20 years standard PPA contract. So the credit risk remained the same all these years. Of course, we have to take into account the lower tariffs that have been offered in the auctions during the last years, and this have resulted to longer tenors in order to be able to sustain the debt capacity of these projects and to take into account the lower tariffs. Otherwise, the financing issues were the same. This has changed. As Mr. Gavalas said before, now we're moving to the PPA period. According to a very interesting analysis made by Aurora, Energy Advisor, you can see that out of the 15.6 terawatt hours extra renewable production which is going to come to the system till 2030, only 3.7 is going to be covered by subsidized schemes such as feed-in premium. The remaining generation must and has to be covered by PPA contracts. Some of them will be covered by corporates, that's a corporate PPA demand, and the rest, as Christos also said before, has to be covered by the utility PPA, effectively the big energy group that they also have generation and supply. They are going to make PPA contract with third party or generators or wind parks, farm parks they also own. This change in the format of the market and how the electricity is going to be sold has implications for the financing for the Greek banks. Effectively, we have a change in the credit risk. We are moving from the PEP risk, a counterparty that we know and we have been cooperating for many years, to a variety of off-takers. So now the banks, they have to assess the credibility of the off-takers. And of course, we must have in place the necessary contractual arrangement to be safe that they are going to meet their obligations. And effectively, if the prices decline dramatically, and the wholesale prices fall below the PPA price, we have to be sure that they're going to meet their payments. Another issue we have to take into account is that the PPA contracts currently experienced in the market, they have a tenure 7 to 10 years. This is different to 20 years we had before. So this effectively leads to different debt metrics, lower capacity. And in order to provide further leverage, we have to take into account the life of the renewable projects post the corporate PPA contract, and effectively the revenues are going to realize when they sell to the wholesale market. So going from a PPA risk to a commercial risk. And this also is going to result to different approach, different credit metrics such as debt service coverage ratios and can sweep. RRF, Christos said very correctly, this has played an important role, and this has played an important role at the right timing. As you can see on the left-hand graph, we have the 10-year IRS curve, which provides an estimate of the Euribor, 3-month Euribor for 10 years, the average Euribor for the next 30 years. That's the cost that the renewables they have to incur plus the spread. Back in 2021, this cost was 0. Now it's 3%. This is an enormous cost for the new projects. And we have to bear in mind that most of the renewables, because these are project-specific financings, they have to hedge a portion of this risk. So the cost of financing, without taking into account the spreads from the banks, it has increased substantially. And here is the role of the RRF. According to estimates, around 3.5 gigawatts of projects have been included in RRF since the summer of 2022. This involves a cost of 2.7 billion, and the RRF loans, which are going to be provided, which is 50% of the project cost, is around 1.3 billion. So 1.3 billion of projects of financing is going to come from the RRF. This is a significant relief. Take into account that the cost for these projects, if we assume that we don't have state subsidies, so there is no feed-in tariff, feed-in premium, and we have corporate PPAs, the all-in cost spread price Euribor is in the range of 35 bips to 100 bips, compared to 5% cost that they have to incur if we have commercial lending. If the projects, they have feed-in tariffs and they are considered as state aid, the rates offered by the RRF are a bit higher, 3 to 4%, nevertheless are still lower than the commercial lending rates. Now we go to the green bonds. In Greece, we had 3.6 billion green/ESG bonds, clarify. We had 3.6 billion of issuance the last years. As correctly said, the first one was Terna, and then it was followed by Mytilineos. We have two groups of issuers. The first ones on the left are the energy-related. They have utilized the funds in order to invest in green energy. And on the right-hand side, we have the issuers that they've used the proceeds either to finance green energy projects, such as National Bank of Greece and Piraeus Bank, or to develop real estate assets and buildings with green characteristics, Prodea, Noval, and Lambda. These are all green real estate projects. We have to say that the last green bond issue we had in Greece was the Lambda that took place in the summer of 2022. That was, at that point of time, with a yield was around 4%. Since then, the increasing interest rates had an impact, and we have not seen any other issues taking place. And of course, we must also take note of the yields. When these bonds were issued, they had a yield of 2 to 3%. Now they trade at 5 to 6%. This has increased, and this is a consideration for further issues. So, what's the next day for green bonds? To clarify, green bonds cannot replace long-term project financing. The financing for renewable projects is going to be undertaken by commercial banks under project finance structures. A short parenthesis here. During the last 5 years and currently, and my colleague Spiros will also, I think, confirm this, all this, the pipeline, the current capacity we have in the system and the future pipeline is extremely, I think, is exclusively financed by the Greek banks. The foreign banks have been reluctant to get long-term Greek risk, and we have not seen them in any single transaction. So only the Greek banks are currently financing this energy transition of Greece. Green bonds. Green bonds can be used to provide the equity contribution needed in order to finance the green energy projects. They cannot provide long-term. Green bonds can have a maturity of up to 7 years. Project finance, they have a maturity up to 18, 20 years. They don't match. But they are very useful providing the financing for the equity portion of the project finance projects. As I said before, the yields have increased significantly. In my opinion, this is a potential buyer to new issues. That's why we have not seen any issues in the summer 2022, and the market has not been tested. Final point, green bonds is a very useful financing tool, but for frequent issuers and well-recognized corporate names. It cannot be used from any investor who wants to develop a green pipeline in Greece. You need big names such as Mytilineos, Terna Energy, PPC. They have recognition in the market to institutional and retail investors and are able to tap the markets. As a conclusion, I would like to say that we are currently reviewing the market. We are waiting the elections to take place and this uncertainty to go out of the economy. We are also expecting the investment grade to take place by the end of 2023, and I think then will be the time to see the new issues coming to the market. Thanks a lot.
Thank you, Mr. Zouro, for your analysis and presentation, but mainly your analysis and very critical points that you raise about funding also small projects and small companies at last, but also the reality in Greek. I would like to hear also from banking sector, the second opinion. Mr. Spiros Venetsianos is Deputy General Manager from European Bank, and we'd like to hear from you.
Not European Bank.
Eurobank.
It's a European bank.
It's a global bank, but okay. Okay.
Thank you. Thank you very much for the
It's a mistake
invitation.
that gives the floors.
As a last speaker, I have to say something different. And unfortunately, the presentation of Thodoris was spot on, so I'll have a few additional things to say, as the views that we have on the market are more or less the same. I'll start from the background, which is an important point for all of us to have in mind, why we are in this situation and why we are discussing about these things. So, and then I'll show you a slide about the different products, and I can more or less summarize and agree with Theo on how the instruments that we have available work. So the focus is that in today's market, we are discussing about a number of green products, and the reason is obviously the climate change. This is something we all need to have in mind. This is the basis. So everybody is working around it, and everybody is looking to reduce carbon emissions. And this is why we have the huge pipeline in renewables. That's why we are trying to change the mix of production in Greece and decarbonize electricity. This is a long journey. It's not straightforward because we have to take into account that this huge pipeline that Theo presented, and we agree with the views, is going to hopefully replace existing power units, but balancing of the market is necessary. New needs are going to be introduced because going only to develop new PVs, it's not going to be a solution. It's going to be a new problem that will require more solutions. Anyway, that's to say about the first point that the process is tough. In relation to the global investor community, they're looking for the banks as well as big issuers, what they're doing with their ESG plans. So there is a scrutiny. Initially, all of us had to say big things about going green, etc. Nevertheless, now we have to be more specific and very transparent and very clean, because there is an increased awareness, and there is also a risk associated with such assessment, because if you don't go green, you are not sustainable as a company. The third one is the business needs, because this is applicable also to smaller borrowers, which is the majority, and they are focusing on how to become more efficient, more relevant, starting from the small hotel to the tenant of a building that is looking for the good energy certificate of the building. So there is a huge need for this transformation, which creates more needs. And of course, as there are needs, capital is required to support this. And this is not only to build renewable projects. And of course, the regulatory expectations, which is mainly focusing on banks. Today, our regulator is not giving us any bonus or malus for being more focused on green energy. Nevertheless, this is anticipated to happen in the next years. So we will be anticipated to support and give more improved terms to greener issuers. And on the other hand, we will be demotivated in holding in our portfolio issuers that do not follow this transformation journey. So this is the framework. And in this framework, there are three instruments as we look at them. The first instrument is the green bond. And I'll say a few things about the characteristics of each one. The green bond has this character that is publicly traded. Nevertheless, it's drawn at a single point in time, and it's repaid at a single point in time in 5, 6, 7 years. So on this basis, financing a project with a bond is a bit peculiar, because the project, you don't need the money up front. But the most important problem is that practically the investment is repaid through a 10-year period, not in a single point in time. So I totally agree with Theo that this is a great instrument to finance big portfolios or finance the equity that is necessary to be injected for the development of energy projects. But of course, it's also a very important instrument for recognized issuers to go also for other needs, not only energy development, but also their transitional business plans. And this is very important. So at the moment, we agree that the outlook is that due to the high yields, the market is not attractive for not very sophisticated issuers, because sophisticated issuers are considering that the market is viewing a more or less correct outlook of the future, and as such, the rates that are embedded, the fixed rates that are embedded in a bond, are more or less the anticipation of the future. Nevertheless, smaller issuers might consider that, we might need to wait for lower Euribor environment. So this is it. and not fix today's rates. The second instrument, something that we haven't discussed because it's not really applicable for the energy industry, is the sustainability-linked bank loans. And of course, the banks provide all solutions for all kinds of issues. We provide solutions for bonds, and we provide directly loans. This kind of instrument is designed not for a specific project, but for a company that would like to improve its ESG footprint, but not necessarily go to the public markets. So, for example, we have applied it in a hotel case. Actually, it is a huge syndication together with Piraeus Bank and the other two systemic banks that we coordinated, and we have put specific ESG targets in relation to energy efficiency, water usage, etc., in order for the client to obtain a better margin. Limited cases, limited availability of historical data are putting challenges into more of such issuance. Nevertheless, as I told you, we are expecting the regulator to impose such solutions to our clients in the future, so we are testing the market. I think this is going to be more relevant in the future. And of course, green loans that are targeted for specific projects, either in the real estate industry or in the energy, like renewables, and with a huge bonus of RRF being applicable also here through the benefits. Nevertheless, the challenge with RRF is that even if it's a superb solution, all the banks need to meet certain targets in relation to both digital and green transition pillars. And sometimes it's not totally straightforward to achieve this. Anyway, the big picture is that I think Eurobank, as well as the other banks, are trying to develop solutions for the clients, are trying to be ready before the needs, and are putting significant targets. So in Eurobank, we have set a target for 2022, 20% of our new disbursements in corporate to be in green products, a target that we have achieved, and in the near future, we are going to announce the 2023 target. So that's from me. Thank you all, and happy to answer any questions.
Thank you, Mr. Verizianos, Mr. Romanos from Eurobank. That's it. You stress very, very important issues. Please, before I have some questions, but before me, I'd like to raise the floor if we have questions to our speakers. Yes, please.
Well, you can probably guess the question I'm going to ask, especially to Argyris Turner. Great stories. This is clearly working. How big can we expect the issuance program to be? I mean, Turner and Grids, for example. I understand the challenges around renewables and energy efficiency, but in theory, we could see a very large program of refinancing rolling over, as well as new projects, right? And I'm curious about your sense of scale.
Well, as I discussed, our total funding envelope for the up to the end of the decade is something like 6 billion. That's the needs that we need to bridge, and this will be obviously a mix of, apart from our own cash, a mix from all available opportunities that we have, always considering the best possible risk-reward exposure in fixing this mix. So PF facilities combined with DCM will be the prevailing, is what we currently have available. How will this, the mix of those two facilities on the credit side, essentially, of our projects evolve will depend a lot on the market backdrop. I mean, what is both of the bankers here discussed a lot about the current, the challenges that green bonds face compared to PF facilities. This is something that is shifting with the market, and considering the importance of the cost of debt for the viability of a project, as it is one of the key parameters that determines this, we need to maintain the best possible flexibility. So if we're having this discussion right now and take a photo, an instance in time, we can discuss and come up with an ultimate, with the most profitable funding mix. But this is a pipeline that will be developed over the next the course of the next 7 years. So at every single time when we face the question of how to fund specific project or a bunch of projects, we need to go through the exercise again and again every time based on the prevailing market backdrop. So it's not easy. Even if we can provide the mix right now, it will only be a snapshot of what we're currently seeing on the market. That's why I'm a bit reluctant to provide some more specific numbers.
Fair enough, but you've already said 6 billion, and my understanding is your pipeline's going to grow, right? We need to quadruple electrification. We've got electric charging, we've got interconnectors, which we haven't properly costed yet, and yet we need to increase. Otherwise, we can't have Yanis's projects properly connected to the grid around the world, let alone regional stability of energy. So the truth is, the CapEx pipeline on current trajectory and Repower EU is going to be much larger than that. I mean, all I'm trying to do is to try and get Eurobank and Piraeus even more excited about the potential for underwriting in this area. Is that a reasonable assumption, that this is going to go through the roof, even though you've got a pipeline of X now?
No, the pipeline is constantly growing. For example, the 6.5 gigawatt target that we have is about 50% of the total portfolio of projects that we have on our hands. Our total portfolio of projects currently stands at about 12 gigawatt, and being reasonable of what we can develop within a very specific time frame, which is the next of the decade, the end of the decade, we have set this target. Obviously, and as we saw in the presentations previously, the targets and the need for electrification will massively increase demand for renewable capacity. So definitely figures are going to increase going forward. Yet we need to take stock of the challenges and the pace of deploying these pipelines to the market. There are still challenges in the pace that need to be properly addressed, and this is something at European, not at Greek, but at European level. If you see, everyone is saying that based on the targets that Repower EU has set, the installation pace for wind, for example, last year was at least 40% lower versus the pace that needs to be achieved in order to meet the targets. So it's a question of realizing those targets, not just saying out some very ambitious and big numbers.
Sophia, while I've got the microphone, Christos, fantastic. Christos, I've got a question for you. You've been developing as well as holding assets. Of course, the world of renewable energy assets is changing at the moment. We've got a lot of fund managers setting up holding companies invested by pension funds who are trying to buy mature assets from companies like you. And if you want some names, I can give you some names, which would presumably allow you to do a lot more project development. In other words, churn your capital faster, because there's a kind of split happening between long-term holders, look like pension funds, and project developments who can recycle their capital quickly. I'm wondering, is that part of your, where's your thinking about the long-term business model for you? Do you become a passive holder of a large volume of assets and grow, a Brookfield style, or do you focus more on project development? And also, what's the potential, given your global remit, around project development? Because what we're seeing in other countries is the sky is the limit as far as they can do. It's all about getting access to land in different countries. Give us a sense of the opportunity.
Thank you. So I'll start by saying that the way that we see things is not starting by the headline, which is extra large. So to say, I mean, I hear all these gigawatts and I'm a bit, say, cautious on how to implement, when, who to sell, and at what prices. So we start from the end, saying that at what price I'm going to sell this output. To the extent that I fix it, this is the time that I start considering which is the capex for it. And then I will present it to my bank, have the proof that is bankable, and to the extent that is, so this is the green light that I get in order to proceed, and this is what we're doing everywhere we operate. We do not go merchant. So, as I said before, there is appetite, there is huge appetite on the offtake, on the corporate side. I mean, state and feed-in tariff is well in the past. Now you have to see credit-worthy off-takers and corporates that can take it. And this actually deletes the borders, meaning that as long as there is a credit-worthy buyer in Greece, this does not mean that a bank won't be able to go for a non-recourse PF to the extent that an acceptable buyer would like to get it in Greece. Now, what we're doing is that we have started seeing that it's type of a fashion to go green, then an obligation in order to get funded and have shareholders to buy your stock, so you have to tick the box. And now we came into the reality that green source of power is the cheapest. So you go because you make money out of it. It makes sense. And of course, I'm not talking about the blip and the peaks that we saw last year on the back of Ukraine, that gas went crazy. Now that is in, say, 50 euros per megawatt hour in TTF, it's still cheaper. It's much cheaper. And if you take into account what the CO2 tariff is that you have to pay in Europe, so it's even cheaper. As long as this regime is going to be there, you will find buyers either being, say, passive funds like pension funds that would like to have an annuity, participants in the market that would like to get the energy and sell it to their end clients, or industry like us. So we do have a smelter that has to be fed by electricity, and we'd like to have an electricity that is green and cheap. So it meets all the requirements. And directly responding to you, I see certain pockets in Greece that are more than capable to cover the sound investments, and these are, as has been told by our friends, the RRF that is huge, to the extent that we can use it and not abuse it. B, the banks that do have an extensive know-how and an expertise on the field, do have the resources, have the capital and the liquidity to do so on the non-recourse project finance of it. I am aligned 100% that green bonds, which is the third on the row, cannot cover this need. They're just gonna have something like a blanket approach for the equity that I'm gonna have to put for my projects. So this is the third source that is well there because liquidity is huge on the back of COVID measures and Ukraine measures. So you can see what the liquidity in the retail market currently is. So if you have to tap it, you will find competitive price, competitive size, competitive tenor, so competitive terms in order to have this on the mix. And still you do have all the supranational banks coming into play, which are more than willing to participate in anything that is green, either on a balance sheet or on a project finance way of doing it. So this would be my answer. So cautiously and very carefully going into this way, not merchant and not because it's in fashion.
Thank you.
I have a question for Spyros. Thank you very much for sharing all of Eurobank's targets in terms of supporting sustainability. Given the panel you're on with 3 issuers of green bonds, I hope you'll excuse the question about whether Eurobank intends to issue a green bond. And if yes, why and what opportunities are you seeing? If no, why not? I hope you don't say maybe.
Yeah, no, of course we are issuing green bonds. And as I tried to say, as a bank that is offering all solutions to its clients, we need to offer all tools with their benefits and discuss with the client the best opportunity and the suitability of the tool for the specific client, the specific occasion, and the specific point in time. And of course, we have, I think we have participated in most of these issues. And
Eurobank to be the issue.
Eurobank to be the issue.
That's why maybe.
Okay. I tried not to understand the question. but yeah, okay, it's spot on. I think, look, the issue about the banks issuing capital, you have seen that we have tried to issue capital for our MREL obligations very early on in this year in order to reduce the requirements to issue bonds during the year because there was a volatility. There might be a volatility due to elections. So I don't know what's the exact program of Eurobank. I'm sitting on the side that is giving loans. Nevertheless, I believe that this will happen sooner or later. So the question is not really if, but when. I think that most of the banks will think to issue something probably after the stabilization of the country, after the elections. Hopefully, we share the view of expressed by Piraeus Bank that if everything goes well in 2023, Greece is going to become investment grade, and this will help us enormously, hopefully together with the stabilization of Euribor's volatility, to come out of the market and tap it. Now, if it's going to be a green bond or not, you know, even if there are thoughts, these things have to be discussed previously with the board of directors, etc., and obtain approvals.
And I think green bonds, they don't qualify as MREL, right? So
yeah,
that's another technicality you have to take into account.
Is there any other question, please? Well, I'd like to have two questions. First, to the banking sector, to Mr. Venetsianos, Mr. Tsouros. We know that big companies are aware in sustainability issues, indexes, and all this. But there is a huge potential in SMEs about absorbing green finance. But we haven't seen this yet very much. What do you think is needed in order, first, to increase this green financing in Greece in SMEs? You think this is education, is legislation, is regulation? what's your, from your experience, should be done in order to move in more finance? Please.
Let me start on this, and Spiros can add on. First of all, let's say that the RRF, which is a tool with a clear green element,
Yes.
25% of the green of the RRF should go to green investments. This
But it's only for a few years.
Okay, it's for projects finalized till to the end of 2026. So for the next 2 years, definitely it's a project. So this scheme is currently provided to SMEs, okay? Nevertheless, because SMEs, they also enjoy some other subsidy schemes, such as ESPA, which have the tax benefits, which are, they prefer to get the cash grants rather than take the interest grant. Now, regarding the green, as Spiro said, the banks, we have issued green loans for SMEs. And the way we do is we put some specific measures, thresholds for with ESG criteria. So if they get the targets, we give them a motive with lowering the spread. This has been provided. Nevertheless, these are instruments which are kept by the banks, right? This cannot be sold to the retail or the institutional investors. But certainly we have the green bonds, not listed bonds for the SMEs. And we have done transactions. Right?
Yeah. I could add that, you know, anticipating the reactions of the regulator, who has done, it was in my slides, but I thought it wasn't very interesting for the panel. We had a review by the regulator in all European banks during 2022 in order to assess what we do with the climate. And 65% of the banks didn't get a good mark. And the reason is that, you know, there wasn't a requirement, really. Nevertheless, everybody was alarmed, and everybody started doing such things, not only for the big issues, but for all kinds of products in a larger scale. So I think that, you know, I totally agree. We have done a lot of things, and in buildings, as I said, in hotels that are green. It's not only the renewables that could be from, you know, a few kilowatts to a number of megawatts. So it's all the scale, but it's also the sustainability link. And I think in relation to the latter, probably the motivation today is not sufficient. I think that, you know, even asking from your client the energy consumption certificate of the building, it's a huge task that we have to go through, but we will get there progressively.
You have also to bear in mind that ESG is becoming a criteria that our credit committees are taking into consideration. For example, if you have a new lignite plant and you go to finance this, it's not going to be an easy discussion due to the ESG characteristics. Recently, together with Eurobank, we have financed a gas-fired power plant.
Yeah.
We have to take that when we went to the board, because there was a big financing take place. They asked about the ESG financing CCGT plan. Of course, the European Commission, they have changed the taxonomy rules, and they have put, I think, CCGTs as a transitional fuel. So this can be considered ESG. But this was an issue. So gradually, it will have an impact.
Okay, I see that you have the product, but according, my opinion is that SMEs needed education about ESG. Maybe it takes some years about ESG. That is mandatory in order to have also cheap finance, cheap money. That's my opinion, because you have the product, but not because in Greece we have many SMEs. And is needed to be addressed not by banks maybe, but maybe from their councils, from the state, in order to engage to ESG and to have cheap finance. And another question is to Mr. Yaredis. Mr. Yaredis, you think that must be legislation, a regulation, in order to boost PPAs and green financing? Or is only in market terms issues?
First of all, I would like to point out that legislation should be only in the cases in which we need a framework. I believe that the market is the one which is driving what's happening in the economy. Is the only driver, not legislation. Legislation is here or should be here in order to create the framework in which we all, state and private sector, should work. We need to be very careful on this. If we have everything under a legislation or a regulation or whatever is written in a Bible, there is no market. My point on this is very clear. Although I'm driving a state company, I believe that the market is the one which has to drive what's going on in the economy in our country.
Okay. Thank you. Maybe in tax, maybe something in tax, because you say that they prefer ESPA because there is no tax, but RRF has. This must be stressed also in the state in order to have the same opportunities to RRF and ESPA and all this. That's maybe we have sometimes, I like to hear from two companies. We see your green investments in energy projects and new energy projects. Are you also looking for green investments in other non-energy related projects for your company, let's say, for energy efficiency? Mr. Cavalla.
So in regards to Mytilineos outlook, two are the type of spending that covers 90% of the entire capex for the years to come, which is solar that we've talked a lot, and recycled aluminium. So this is the second very big part of the capex that we are about to go for, which is probably going to be equal to the existing capacity of producing primary aluminium, but coming from scrap, do not require bauxite, won't require the capacity of electricity that primary is using. So this is in parallel the second way in order to become greener at the same time in the other, say, sector of the group.
Thank you. Mr.
From our side, at the parent company at the Yekterna level, we are the largest infrastructure group in the country, operating critical assets across Greece. Apart from the obvious investment in renewable, a lot of things are taking place on our other assets. For example, in the motorways, there's a lot of things that will happen going forward, considering electrification. Greece is lagging behind what EU is doing into the rollout and the penetration of EVs. So we have plans to do a lot of things there on investing on our assets, making them more friendly to users of this technology. And another major point project that we are taking on is the revamp of the previously state-owned nickel company, Larco, a company that has been notorious for two things: its arrears and its pollution, and the pollution that it has caused to the to the area. This is a task that we are very eager to embark upon. We have very specific targets and our mindset around how to make this asset reach its potential and further exploit the minerals and the potential that Greece provides to this type of activity. So that's our two examples of what we're doing additionally, apart from the obvious of investing in
energy and renewable energies. Okay. Do you have we have a few minutes if there is there a question? No? Okay. I'd like to thank the excellent panelists for your view and your comments and all of this. Okay. Thank you very much.